Hello everyone, please take your seats for our last but not least session of the day, Overcoming Impatience, Essential Tactics for FX Mastery with Nicolus Nenzhelele. A quick reminder, online trading involves the risk of losing your funds. Make sure you understand all the risks involved, exercise caution, and trade with brokers you trust that hold the appropriate license by the FSCA. And now for our last session of the day, please welcome Nicolus.
When it comes to forex trading, it doesn't matter how smart you are, and it has nothing to do with how smart you are or which strategy you're using or which technical best analysis you have or fundamental analysis you have. It has everything to do with how you behave. And a behavior is a really hard thing to teach, even to really smart people. A person doesn't know how to handle their emotions well. They become what we call an impulsive trader. Ladies and gentlemen, my name is Nicolus Nenzhelele, the CEO of BUC, where we have over 500 students. Welcome to Overcoming Impatience. Now, before anything else that we can dive into, I think it's best that we first understand what are we talking about when we are talking about impatience. And I normally refer that to the ability not to be able to wait to execute the trade. You are so quick to execute the trade that you forget to follow even your own strategy that you have learned or that you have practiced. So that leads to you even taking trades immaturely, going in when you are not supposed to go in, because you are eager, you cannot wait to go in. That is what we call impatience, and that will drive you to expressing a loss, because you are going to lose confidence over a period of time, because you will think your strategy does not work simply because you are impatient. You are not even following your own strategy, because you are not able to wait for your strategy to give you the time to go in and the time to go out. And the moment that happens, we go into what we call the head mentality. And in the head mentality, that's why you just follow the crowd. You just jump in the trades following other traders. And when that is happening, that is why you're going to be very frustrated, and you are going to feel like, no, forex trading is not working for me. The strategy is not working for me. Whereas at the end of the day, you are just being impatient. The psychology of impatience, in most cases, the cause of it, what normally causes it to happen, it is unrealistic expectation and quick and significant profit. And this happens mostly because of the success stories that you hear. And most of them, we get them through online, Instagram, you know where. And when we see those full margin, those success stories that you see, you begin to develop unrealistic expectations. And that puts your capital at risk. And this is very painful, because sometimes you are trusting that capital to pay your bills at the end of the month, or even to fund a particular business. And in this case, certain elements are going to develop, because you're going to be a very frustrated trader. And instead now for you to start following your own strategy, you're now going to be trading based on what we call fear and greed. And when you're trading based on fear and greed, it means that you are going to start to make very poor trading choices. I know that I did talk about on what does impatience mean, and be like, this guy's talking about negative stuff. How do you overcome this thing? How do we now go into how do I become a trader that overcomes impatience so that I can become profitable? One of the things that you need to develop as a trader is adaptability. You need to be able to adapt to the current state of the market at that time, regardless of your strategy. In your strategy, if you're going in on 1 and you're going out on 2, there are times where there's going to be 1 and 8 on the prices. You need to be able to adapt to the current state of the market. Regardless of what is happening in the market, you need to be able to adapt and bond within. And to be able to do this, there are certain elements that you need to develop, and which is one of them is discipline. And being a disciplined trader is being able to stick to your trading plan. And mind you, when we are talking about trading plan, we are not talking about you saying you're going to make $30 per day or $300 per day. Because if you sit down and say you have got a trading plan, you are going to make $300 per day, which is going to give you $3,000 a month in 30 days, which is around 65 to 70,000 rand in South African rand. You are going to become what we call a desperate trader. Setting a trading plan is not supposed to make you a desperate trader. It's supposed to make you a disciplined trader so that you trade like a hunter, not like a gambler. Because you have set yourself up, folks, when you say, I'm going to make $30 per day, and now you are looking for opportunities that are not there. A trading plan is supposed to assist you to be able to know when to go in and when to go out, so that you'll be able to overcome what we call over-trading. Because due to your trading plan, you'll be able to follow your trading strategy. And these are one of the ways that you're going to be able to overcome impatience, by sticking to your trading plan. And one of the things that you're going to develop on this channel, you'll see that you'll begin to develop consistency. And when you're developing consistency, it means that you'll be following a trading plan. When you're following a trading plan, you'll know when to go in and when to go out. Then the consistency that I'm talking about, it's in you being profitable trader, which means that you're going to be a consistent, profitable trader because you have developed your own trading plan, and you begin to understand what do we mean by trading plan. You're not setting yourself up when you're talking about trading plan. A trading plan is supposed to be your friend. It's supposed to help you be able to navigate through the cons and pros of trading. And one of the things that you are going to need to develop to overcome is continuous learning. You need to be able to learn continuously. Regardless of your strategy, you need to be able to adapt your strategy. You need to be able to redefine your strategy. You need to be able to readjust your trading strategy. And another thing that normally kills people is when they are too detached to their trades. You need to be able to practice what we call detachment, so that you'll be able to make rational, sound trading decisions, because you're not so much attached to your trades. In that way, it's going to be easier for you. But the moment you're so much attached to your trades, it becomes very difficult for you to make rational decisions and sound trading decisions based on your trading strategy. Before we could even go more further, there's something that I want us to talk about. There is a man, it's a case study that actually show a full proof of that it is possible to be able to overcome detachment, for you to be detached from your trading strategy, for you to be detached from your emotions as a forex trader, and be able to develop discipline and become a profitable trader. There is a man that was born in 1877. His name is Jesse Livermore. He comes from a humble family. His father was a farmer. He ran away from home through the help of his mother with $5. But short story short, by the age of 15, he was already trading. And by the age of 25, he was worth $250,000. Was a stock trader. And there's a day that we call the Black Tuesday. In 1929, most traders, they jumped off the windows because of the loss that took place. Jobs were lost. Homes were lost in 1929. But there is one man who stood up, Jesse Livermore. When he came back home, his wife and kids were crying because they didn't know what to expect, because traders were committing to suicide because they were so much attached emotionally to their trades. And Jesse Livermore in that day, he had made over $100,000, which is today's market. It is worth $1.5 billion to $2 billion worth. And he made that through one single trade. And before that, Jesse Livermore studied the market. He waited patiently and took only one trade to make that amount of money. So what made Jesse Livermore stood up? Things like head mentality. Everyone was buying. Let's buy Nasdaq is a buy. Nasdaq is a buy. Everybody was jumping in. Everybody was jumping in. It was called the Great Depression. But Jesse Livermore, he stood up And it's a proof to us that when you stick to a trading strategy, when you stick to your trading plan, when you are detached emotionally from your trades, and when you continually learn, because Jesse Livermore continually learned. Before that, he was practicing. Before he could take that trades, before that could happen, was practicing the strategy. So it's a full proof to us that when you continually learn, you are able to adapt to the changes of the market. Jesse Livermore was writing down the changes of the market and the changes in price and how the market is moving, regardless of his strategy, was able to adapt and stay within the zone and begin to understand, regardless of the trading strategy that I'm using at this moment. But now I understand this is how the market is moving now, and how do I adapt into how the market is moving now and become a profitable trader. And he sat down, he began to study, he wrote down the different changes in prices, he took a short trade, and it was worth $2 billion. So with this story of Jesse Livermore, we do learn that it is possible, and it's a proof to even modern day traders that if they remain emotionalness, they master their emotions, they stay detached from their trades, and they continue to learn, they adapt to the changes of the market, they also can become very successful traders. So from me to you, that's all. Thank you. I know that there might be a few questions, so for a few minutes, we'll have a few questions regarding managing your emotions yeah.
Thank you so much, Nicolus, for the insight. That was great, powerful. Just want to ask, in terms of the trading plan, can you please share some of the examples that one can actually follow?
All right, thank you very much. Yeah, when it comes to trading plan, based on the strategy that you're using, the trading plan, as I've said, that is supposed to assist you so that you don't overtrade. Because when on a trading plan, you'll be having what your long-term goals, right? Or this is how I want to achieve, and this is how much I want to achieve, but you should not become a slave to it, where you are now desperate to go in the market. So the trading plan based on a strategy is supposed to give you when are you going to go in and when are you going to go out. So your trading plan has to be it has to be oneness, it has to be married to your trading strategy, where you know where am I going in and where am I going out. So when you develop a trading plan, each and every trading plan is going to be different based on the strategy that you're using. So based on your strategy that you're using, you know that when often do you go in and when often do you not go out. Do you look for low? Do you look for high? Are you trading based on news? Do you wait for news to come out first? Or are you placing trading orders? Are you using market execution? Based on your strategy, it means that your trading plan is supposed to assist you on when to go in and when to go out. As much as you've made money, your trading plan was supposed to show you that, okay, I've made enough for the day. I'm out, I'm done. So it's supposed to help you become a disciplined trader. So those are the goals of your trading plan. If the trading plan is assisting you to become what we call a disciplined trader, tick. That's good. Thank you very much for asking that question. It's very important. I really appreciate it.
Good evening, everyone.
Good evening.
Yes, my question is with the people who are at the beginning phase of trading. There's a lot of information online, really.
Yeah.
Like normally the first thing you go in is YouTube. Like I normally see your yes.
Yeah.
So I wanted to know, because what is frustrating more, let's say overcoming impatient, what makes a trader at the beginning to become impatient is the information that we get online.
Yeah.
So my question to you is, how do I manage the information that I get online? Because most of the time you'll find a trader online saying they flipped 5K to 1.5 million, within a day, it brings so much impatience to you, and then it seems as if you do not know what you're doing at the end of the day, You have your 500 Rand, you have your 1,000 Rand on your account, and then they will tell you, no, you know what, that thing, we can take it to 700K, That thing has, as a trader myself, it has brought me down a lot, it has took too much from me. So as a trader or someone who's experienced in this, can you please advise us on that?
This is a very important question. Thank you very much. What's your name? Refill. Yeah, you can
Thank
hold
you.
the mic, refill. Yeah, so this is one of the things that I was talking about, unrealistic expectations. As I gave example that sometimes these are stories that we hear online. You know, when they flipped 1,000 to 3,000 rand, you know, and there's no risk management there. What could have happened if the trade went the other way? So in that way, that's where also risk management comes into a place. Sometimes there's nothing wrong with the style that you're using, but the way you're risking in. Because also when the market is going to a particular direction, with the style that you're using, maybe it's a buy, it will not go just straight to the buy, right? If refill it, you have to agree that if it was like that, we're all going to be rich. I was going to sell on the other account, I was going to buy on the other account, and the other one will make me rich. So the market fluctuates, right? So in that case, now you manage that. You need to be able, when you find a forex trading strategy that works for you and you're best testing it, you need to apply good risk management. Don't allow yourself to have the head mentality, doing what everyone else is doing. Because they are going full margin, you're not supposed to do that. You need to remain patient to your own strategy, apply good risk management, use a reasonable lot size. When you're using a reasonable lot size, then you will see that, no man, this strategy is, you will see that whether it's the strategy that is not working, or it is you that you are having impatience. Because sometimes you will realize that after using different strategies, the problem is you. And also sometimes the strategy is not working. And sometimes as much as you've got the strategy, you don't have there's what we call continuous learning, and you being able to adapt to the market changes, right? Because the way we have bought when it was like this yesterday, you're waiting for that to happen. It will never happen. Honestly speaking, the market changes every day. We need to be able to adapt to how it is changing. We are having different events. I will share something with you. The best thing that we have learned about history and COVID and all these things that cause the market to crash is that we will never be able to predict what's coming. Nobody saw COVID coming. Nobody saw World War II coming. Nobody saw the flu coming. Nobody saw 1921 coming. Actually, in 1929, everything seemed going well. So the best thing we learn from history and these things is that we can never be able to predict what's coming. But we need to be prepared by applying good risk management. So with too much information that is coming to answer that question, you need to choose one person that you have seen their story, you trust them, it's a forex school, that you say, I want you to teach me how to trade. I want to be a student of the market. I want to learn. I don't want signals. I don't want you to show me how to catch a fish. I want you to sit down with me, be honest with me, teach me how to trade. We have brokers that also have got educational platforms where they teach you how to trade. You learn how to trade. From there, you learn the strategies on how to actually execute them. Because knowing how to trade is different from learning the forex trading strategy. And also, continual learning, doing a research, being able to manage that, I think that can actually help you overcome impatience, especially with dealing with the head mentality.
I'm sorry. And the other thing is, we are tired of what do you call it? The forex signals, eh?
Yeah.
I'm really tired.
Yeah. Yeah.
Can you please elaborate? Like normally we, at the position where I am, I need a school, flat. Just go to school, forget about making money on trading, get to know what is the market.
Yeah.
That's it.
Yeah.
I really don't need like signals because we're having this. Can you say something about this signals?
Yeah, thank you very much. Someone can be saying, I've met people, they're saying they're traders, and this is unfair. This is unfair for people to say 90% of traders are losing money. Because if today someone say I'm a doctor, they go and operate and they fail, and the person dies, we cannot call that person a doctor. So we have a lot of gamblers out there. So also when it comes to the signals, I've met a lot of people saying, I've been trading for 4 years and I think it's been happening, but they don't know anything about the market. They've been taking signals. They have got over 10 signal groups. So I believe that it's also your personal responsibility to see to it that you are finding the right school or the right mentor where you sit down and give yourself time to learn. It can take a little bit longer. Be patient with yourself and learn the basics from understanding the terms of the forex trading, understand the strategy, and train. After you understand on your own, because for us to call you a professional trader, you need to be able on your own to be able to determine the market direction, right? That's why you're not going to be able to, maybe for you, in order to survive, to depend upon somebody's signals. For you to be a professional trader, you need to be able to predict the market direction. It's prediction because nobody knows. To predict the market direction and apply good risk management. So you need that school, you need that information. And there are platforms out there. There are even the brokers on their own, I'm not speaking for the brokers, they do have that platforms where they actually teach you how to trade. They have got different strategies that they are providing. So I don't know if you are skeptical about learning from the brokers, but if you do, we can elaborate on that. But yeah, there are platforms to learn how to trade. There are tools available. There are books. Nenzhelele has got a book on forex trading. You know, you can purchase these books, do a research, you know, on these books, and self-learning as well. Don't just be going around donating money all over for the signals and everything. You know, invest in education, not in gambling. Invest in education. Even UJ does offer forex courses. Even brokers offers them for free. So invest in education. That money that you are paying for signal, you could have used it to buy a forex trading book, or someone will sit down with you and be real with you and teach you. So I believe that putting yourself responsible and say, I don't want the signals anymore. I'm tired of the signals. I want to know the market for myself. I want to be able to execute for myself. Then that will be good. Are we okay, Refilo? I think we should get a question also from a BUC student. This side, the mic this side as well. Yeah, they are my students here as well. Yeah, so definitely should have one from BUC to ask a question. Yeah.
How do you manage greed?
Yeah. How do you manage greed? Yeah, greed is a very powerful thing, and greed, remember, it's based on behavior. When I opened the statement, I said behavior is a really hard thing to teach. But I believe that it can be done with practice. You can practice to not have greed by applying good risk management as well. Unrealistic expectations. You know, having unrealistic expectation develops greed. It means you want so much more from the little that you have, from the capital that you have. You've got 500 rand. You want in a day. You want 10,000 rand today, now. Emergency, you've got the state of emergency in your head that you want to make this amount of money. So I believe you can manage greed by having a proper plan and proper risk management, right? That's how you can manage greed. To say, okay, I understand I've got this capital, but it's going to take the process, it's going to take time to get there. And then you take your time, you know, trading, placing your trades, applying good risk management. Remember, a trade can be wrong and you might not blow your account, and the second trade can be right and you make a reasonable amount of money. Right, so you need to be able to manage greed by applying a proper risk management and being realistic. Stay away from the stories of in the Instagram that are showing you 500, 200,000. You know, sometimes they are true in most cases, but can you manage to refund your account 10 times a day? You know, so you have to look at your risk appetite. Look at your risk appetite. Can you manage to keep refunding your account? If not, apply good risk management.
Mr. Nick,
And,
how important must my why for trading be? Like my reason for trading, is it important that it be a specific thing, or can I just be a trader because, hey, I just want to get rich?
Yeah.
How important must my why be, or what must my why be?
Yeah. So your why is very important because it serves also as a purpose in your forex trading journey. Most people, they trade for financial freedom. Some, they just want an extra income. Some, they want to fund a certain business. They don't see themselves working for their entire life. So, but they don't have like 1 million rand or 300,000 rand, but they have only 2,000 rand to fund their account. So they are willing to fund 2,000 rand to grow that account to fund their businesses. So your why is the fire that will keep you burning. You keep learning. You coming back after failure. An example, Nenzhelele, what happened to Nenzhelele when he was married? The time he was married, he went through bankruptcy. He blew an account. And he asked his wife to sell something that he bought for him during the marriage. It was a necklace, and she divorced him. There are those moments. She divorced him. She left him because of that. Even though he ended up being worth more. So your why will keep your fire burning to come back. So that way he came back to continue trading because he wanted to be financially free. His father was a farmer, but he saw himself as he wanted to be financially free. He was the great king of the market. So your why is very important. It's because it's your fire. Keep your fire burning, because if you don't have a strong why, when you blow your account, you'll be like, there's no need. But if you know, this is what I want, this is my goal, and the only way that can another way that can help me achieve this is by trading. Then it allows you to fix your mistake, right? It allows you to fix those errors and learn from your mistakes. Your why helps you fix errors, not give up. The moment you experience a loss, your why helps you fix the errors and not give up, because you know where you're going. Also, to give an example, if you believe that maybe studying medicine is going to help you, if you fail maths, you're not going to give and go home, because you know why you are going to school. Maybe you're going to school because you want to change your family's financial status. That's why I want to change my family's financial status. Even if you fail maths, you're going to go and look for a tutor, pay the tutor, teach you maths, you pass that medicine by fire, by force. So even in forex trading, you experience a loss, you know your why will keep your fire burning to continue learning, fix those mistakes, and come back to forex trading, and we make money. I see they are complaining that my time is up. Thank you very much.